Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. Let's take a look at the week ahead from an earnings perspective. Of course, Q4 earnings in full swing now over in the US, and therefore there's plenty to sink our teeth into in the week ahead. I'll pick out three of my top picks to be looking out for and also give you an idea of exactly where we stand in terms of earnings thus far. Let's kick off with the outlook in terms of what we're seeing next week. It starts off with the likes of Johnson & Johnson and Procter & Gamble, Netflix, Verizon, Texas Instruments, General Electric, some big names. This is on Tuesday. Invariably, this often happens. You have a relatively quiet Monday, often a relatively quiet Friday. The big bulk of the earnings often come out midweek. And this is the case once again. Midweek, we see on Wednesday, Tesla, Abbott Labs, IBM, ServiceNow, AT&T. And then moving into Thursday, we see the likes of Visa, Intel, T-Mobile, Comcast, Union Pacific, Blackstone, and Starbucks. Closing out the week on Friday with the likes of Colgate, Caterpillar, and American Express. Certainly what's notable within this is that there's a lot of companies that should shed a light in terms of consumer habits. The likes of Johnson & Johnson, Procter & Gamble at the front end of it in terms of some of those more necessary consumer items. And then certain things that are going to really highlight consumption on a different level. The likes of American Express, of course, talking about travel and talking about expenditure as a whole on the Amex cards. Also the likes of Starbucks in terms of how much are people getting out nowadays, the return to the office, and how that impacts people's spending in terms of the likes of their products. But also the likes of Visa, which really ties up alongside that American Express number and really should give us a good idea of how the US consumer is faring at a time when, of course, all eyes are on the data points to signal whether we are, of course, seeing a strong end to last year at a time when we, of course, saw US consumers trying to front load their purchases ahead of the Christmas period. So how did we see the likes of Black Friday, the Cyber Monday, the pre-Christmas period play out? Well, Amex and Visa in particular should give us a very good idea of exactly that. These are the numbers so far in terms of the number of S&P 500 stocks that have reported, only around about 7%. And in terms of performance, by and large, the outperformance has come in terms of earnings, and revenues have been somewhat mixed. The likes of consumer, both cyclicals and non-cyclicals, both having relatively questionable performance in terms of revenues, and therefore these numbers that we're seeing coming into this week are going to be very interesting as they really hammer home the performance of those two segments. Financials have been a big focus thus far. As you can see here, 21% of the financials have reported, and much of that are the big names, really the big banks. Outperformance in terms of earnings thus far, but once again, somewhat mixed in terms of revenues. But a number of these sectors haven't really seen much by way of earnings thus far. Of course, we're only really at the tail end of the first major week. First week of earnings really saw those big banks on the Friday. Then we've seen the second week now. So how are things going to play out as we move away from that focus on the financials and a little bit more on the consumer? In terms of expectations, let's just take you through three of the companies that I'm going to be looking out for. First and foremost, I wanted to show you Tesla. Of course, this has been a darling for many investors through the years, but question marks coming abound recently with the fact that Elon Musk has essentially said that he wants to have a controlling stake of 25% if he is to continue to generate business on an AI perspective within Tesla. Quite how that's going to play out remains to be seen, but certainly the company's been struggling as of late, and I'll show you exactly that within the chart. We can see price action on the weekly time frame here, seeing the stock really rolling over back into trendline support. In terms of the long-term trend, we have got this descending trend line in play at the top end of things. So this does point towards the possibility that we see a continuation and a continued breakdown here as we essentially see this stock channeling back down towards that 194 and the like. Certainly as markets roll over and we see a risk off play starting to come in for equity markets on the idea that perhaps markets have got a little bit carried away in terms of quite how many rate cuts we're going to be seeing in 2024. That I think does point towards the potential for a continuation of this move towards the downside as we go forward. Of course, the earnings themselves are going to be particularly important within that. But certainly as things stand, you can see we're in the mid part of something that looks relatively similar to what we have been seeing back in July and also that sell-off that we saw in October. So as we're looking here, this prospective trend line coming into play. But unless we see a breakout from this sort of near-term trend of lower highs, that does point towards the possibility of further downside. So 223 towards the upside needs to break to start signaling a more constructive outlook for this stock. And until then, we're continuing to sort of channel lower. And there is a good possibility that we do see further downside as equity markets start to roll over. Then I wanted to bring Netflix to your attention. Certainly, if we're looking in terms of things from a sort of earnings and revenue perspective, what we can see here is compared to the fourth quarter last time around, we're looking at a 220 figure. So significant improvement in terms of earnings expected on a sort of quarter on quarter basis or Q4 2022 to Q4 2023 basis, I should highlight. Certainly, if we're looking at the sort of surprises, generally we have seen the stock outperform and beat heavily on earnings, but often struggle when it comes to revenues. More recently, we have, of course, seen this focus on them clamping down on people sharing their accounts. So that hopefully should continue to provide benefits as people potentially sign up for new accounts. But certainly 220 expected on the EPS and 8.71 billion expected in terms of revenues. If you're looking in terms of the performance, what we can see here in terms of earnings is that the Q4, as you look back to Q4 2022, Q4 typically sees weakness that they then build upon. And the expectation in terms of forecast for the beginning of 2024 do signal growth over and against the beginning of the first three quarters of 2023. So markets are expecting a better Q4 compared to the prior year, and they're expecting to see a better Q1, 2, 3 coming in 2024. So the outlook also will play a key role in shifting these expectations as we go into 2024. In terms of the chart, we can see that the stock has been doing relatively well. The weekly time frame really highlights the lows back in June 2022, really forming a base, and we have been building from there. As we see question marks around about sentiment for equity markets at the moment, there is a possibility, if we do see some disappointment in terms of these numbers, a possibility of us rolling over into another one of these protracted retracement phases. A breakthrough 461 would be required for that to come to fruition. So near term, we do still see this uptrend playing out. If we break the 461, it points towards a more protracted pullback coming into play. But certainly this rally that has been lasted since sort of mid 2022 could have further to run yet. So look out for whether we break that near-term support level. If we do, it points towards a pullback, but that could be a potential opportunity for the bulls to get back in. If we don't break that support level, then we're looking to continue to build and push onwards and upwards for this stock. And then finally, I wanted to highlight Visa. Of course, like I said, Visa going to be a really important stock moving forward, because this gives us an idea of spending habits. This essentially is going to be important in the same way as a retail sales figure in the US is important. It tells us whether people are spending. And bear in mind that this company really benefits from inflation, because the amount that people spend does increase over time. And we have seen that in terms of the value of retail sales has been rising, but the volumes diminishing. Certainly, that's not necessarily too much of a concern for Visa, because they care about the value of transactions that are passed through their products. And as we can see here, outperformance over recent quarters on both revenues and earnings in terms of expectations. 234 expected according to TradingView. That's for the first quarter. If you look at that compared to last time around, 218. So we're expecting to see a build in terms of the last reading that we've seen last time around a year ago, and then in terms of the prior figure, a slight improvement on that reading as well. In terms of revenues, 855, that would be a figure that's lower than the Q4 figure of 861, but significantly higher than this time last year. In terms of the chart, of course, we'll be able to look at that now. And you can see in terms of the wider weekly time frame that this stock has really outperformed over recent years. COVID was a brief jitter within a long-term uptrend that has continued to build. And if you think that the US consumer is going to continue to be strong, this is a great stock to be looking out for. The daily time frame, I can show you here the near-term swing low, 256. As long as we don't break below that level, then this bullish trend continues apace. And certainly it has been a very advantageous stock for those invested in it over recent years. So near term, I think ultimately the sentiment around this stock is going to be guided by what's happening in terms of the earnings. But from a wider perspective, unless we see the US economy really roll over in a meaningful manner, which hasn't been happening at the moment, it does point towards this stock continuing to outperform as we move forward. So these are looking in relatively rude health as things stand. That's it for today. Certainly keep an eye out for some of these earnings because they're going to bring potential volatility in terms of potential downside. I think that could be more prominent if a company underperforms, because bear in mind, you've got to consider the wider market structure at the time. Sentiment within markets at the moment is suffering on the idea that we're going to see the Bank of England, the ECB, the Federal Reserve doing less in terms of easing than markets have been pricing. And that repricing towards a perhaps less dovish stance from the central banks does provide the basis for a risk-off move. Equity markets over in the US have been hitting record highs, and therefore there's a possibility of them rolling over over the coming period. That coming at the same time as the earnings numbers coming out means that if a stock does particularly well, actually sentiment isn't great at that time anyway, so it doesn't necessarily take advantage of it in the same way as when we see markets really heading lower in a meaningful manner. That can cause the stock to really see significant downside volatility. But if you look at the long-term trend and you look at, say, the weekly chart and the like, you're able to then look at things from a more advantageous position and see that some of those pullbacks that you might see could be a potential opportunity if you gauge the fact that that weakness could be potentially temporary in terms of the performance of the company, and also could be a reflection of the fact that we're seeing markets at the moment in a not particularly great space, but a wider outlook for 2024 that does point towards potential strength for US equities going forward. So certainly something to chew over as we head into a host of really interesting releases in terms of earnings, certainly with a focus on the US consumer.